Hi everyone, this is Senior Professor D. Channappa from Usmania University, Hyderabad. As you aware that the government of India, group of the minister, have taken a decision to that 18% of the GST should be waived off onto the life insurance policies and health insurance policies in India. And the first week of the September, GST Council will take the decision. Once they approved it, it is going to affect in India. Just you looking back that in India, there are 57 insurance companies have been working. Out of it, 24 life insurance companies, remaining 33 general insurance companies. Within the 33 general insurance, again, 5 stand-alone health insurance business companies are working. Now, this fully exempt of the 18% of the GST on health insurance product as well as to the life insurance product is a welcome step. The objective to waive off this GST is to penetrate more and more, to provide the insurance benefit to the middle class people, and provide the healthcare facilities to the needy people. On this, the government of India has taken decision to waive off the GST on life and health insurance products. Now, some of the important intricacies are included in this exempted of the GST on health insurance as well as to the life insurance product. Number one is input tax credit. Exactly what is the meaning of the input tax credit means? Whatever the tax collected on the name of the GST, it goes to the government of India. While collecting or doing any kind of business, any expenditure incurred, that should be reverted. That could be called a tax credit liability to those companies. It could be called as a input to tax credit. Now, for example, coming to the insurance sector, for example, a policy holder is paying rupees 100 as a premium. Today, still we have the 18% of GST on insurance product. The policy holder has to pay the rupees 18 as a GST. Now total 100 rupees is a premium plus 18 rupees is a GST. 118 rupees he has to pay to the insurance companies. Since the insurance company collected the GST on GST number, straight away that is credited into the Government of India Treasury account, and remaining 100 rupees is credited into the insurance companies. Now the intricacies is there. Now the government does not want to collect the GST onto the insurance product. Now the government is not collecting, but to collect even the premium to run the insurance business, definitely there is a fixed expenditure as well as to the variable expenditure. The fixed expenditure is like rent is there. The variable expenditure like agent commission and indemnity cost and other kind of costs. So for example, in this case also, the other kind of expenditure is considered as a rupees 70 rupees. Now even today, other kind of cases, even the council of the ministry has also taken decision that there are only two slabs should be there on to GST. Either it should be 5% or it should be only 12%, not 12% and 24%. So as of now, again, now we have the 18% GST. Again, on 70 rupees of the expenditure of the insurance companies on 100 rupees premium, for example, that is coming as usual, again rupees 12 rupees 60 paise it will come. Now the question is, this 12 rupees 60 paise who has to meet? Either insurance companies has to meet, or again it should be collected from to the policy holders, or the government of India should be waived off even the input to tax credit also, number one. Again, another question will also be coming. Now when it is coming to the claims, again claims also be considered as a capital gain. Once the capital gain is there, now it may be either 5, not even 5, it is going to become as a 18 percentage. Again 18 percentage tax is also, that is also a burden onto the policyholder. Now the insurance companies definitely whatever the cost is coming, definitely they are going to be transferring to the policyholders. Therefore, what I appeal to the government is to make it as a zero tax. Kindly exempt the 18 percentage onto the insurance products, as well as to the waived up onto the even the input credit tax also. So I appeal to that to it is make it as a zero tax or nil tax. Again, second factor I would like to bring to notice that they make it more clarity onto the claims. Otherwise, insurance companies they will add it as a rider. They will make it as a extension of the benefit or additional features like what banks are rescheduling whenever the prime lending rate is reduced. Similarly, the insurance company is also going to make it to real sense to benefit the policyholders, to penetrate the insurance sector, to address the catastrophe of the poor people, to provide quality health facilities in India. The government should come forward and make it as a zero tax and nil tax and give clarity onto the claims. Definitely, this is going to become as a very, very welcome step in India.